Hey everyone, welcome back to Corporate Decoder, the place where we unravel the financial mysteries that make or break companies. Today, we're diving into Kartoon Studios, Inc., and let's just say they're cooking up something interesting involving a whole lot of stock and a rather unusual amount of warrants. Stick around, because this filing is packed with details that could clue us in on their future plans. Before we start, if you appreciate getting straight insights from corporate documents like this, make sure you are subscribed. We also have a Discord community linked in the description below where we dive even deeper into these filings, so come join the conversation. Alright, let's get right into it. Kartoon Studios Incorporated, a company we know for its animation and entertainment ventures, has filed a current report, an 8K, which usually means something significant has happened. And wow, has something happened? They've announced a registered direct offering paired with a concurrent private placement. Think of it as selling new shares directly to investors and then throwing in some warrants, which are basically options to buy more shares later. So what is the deal here? On the 20th October 2025, they entered into a purchase agreement to sell a bundle of securities. This includes selling shares of their common stock and also pre-funded warrants, which essentially allow investors to buy shares almost immediately. On top of that, they're also selling common warrants in a private placement. These are options to buy more shares down the line. All in all, they're looking to sell up to 3 million shares directly, along with warrants that could potentially allow investors to buy nearly 7 million more shares. And in that private placement, they're offering warrants to buy almost another 10 million shares. It's a lot of potential stock floating around. They expect this whole package deal to wrap up by the 22nd of October 2025. The goal here is to raise about $7.3 million in cash before they pay out any fees. The price for these offerings is set at $0.738 per S-share or warrant. This injection of capital is crucial for Kartoon Studios. And what are they going to do with all this newly acquired cash? They say it is for working capital and general corporate purposes. But the really interesting part is where they plan to allocate these funds. They're earmarking money for the global launch and marketing of new animated series like 100 Acre Woods, Winnie and Friends and Bitcoin Brigade. Plus, they're funding the expansion of the Stanley universe and supporting the ongoing growth and content acquisition for their streaming service, Kartoon Channel. So it is clear they're betting big on their content and their own platform. Now, while a good chunk of these securities are being offered under an existing registration statement, meaning they're already somewhat vetted by the SEC, the warrants being sold privately are not registered. They're being offered under an exemption, which means fewer regulatory hoops, but also that these investors are likely more sophisticated and aware of the risks. Who is making this all happen? Dawson James Securities Inc. is acting as the exclusive placement agent. They're essentially the sales force for this deal. They're getting a hefty fee of 7% of the gross proceeds from the sales, and also from the exercise of warrants. On top of that, they're receiving their own warrants to buy about 693,000 shares of common stock. This compensation structure is pretty standard in these types of offerings, incentivizing the agent to get the best possible deal. Here is something that stands out for the main investor, the purchaser. They've secured the right to participate in 50% of any future financings the company undertakes for a whole year after this deal closes. This gives them significant ongoing influence and opportunity to increase their stake. There are also restrictions on when the purchaser can sell the company's securities, at least until the end of 2025. They can't just dump their shares onto the market immediately, giving other investors a bit more breathing room and preventing a sharp price drop unless they sell at a price above $1 per S-share. Let's talk about these pre-funded warrants. They can be exercised almost immediately at a very low price, just a tenth of a cent. The number of shares you get from these warrants will adjust if there is a stock split or dividend. A key detail here is that a holder can't exercise these warrants if doing so would push their ownership over 4.99% or optionally 9.99% of the company's outstanding shares. This is a common way to prevent a single investor from inadvertently triggering certain reporting requirements or gaining too much control too quickly. Now, for the common warrants, these have a bit more of a waiting period. They can only be exercised 6 months after they're issued, and they expire 5 years after that initial exercise date. If at the time someone wants to exercise these warrants, there isn't an effective registration statement for the shares, investors have the option to do a cashless exercise. This means instead of paying cash, they get a reduced number of shares based on a formula. Similar to the pre-funded warrants, the number of shares and the exercise price will adjust for corporate actions. And again, there is that beneficial ownership limit to manage. A crucial point for these common warrants is what happens in the event of a fundamental transaction. This basically means a major company change like a merger or acquisition. If that happens, the acquiring company steps into Kartoon Studios' shoes regarding these warrants. And importantly, warrant holders have the right to demand their warrants be bought back for cash based on their calculated value if a fundamental transaction occurs. However, if the transaction is not controlled by the company, they might just get the same kind of deal as the common stockholders. It is important to remember that these summaries are just highlights. The full legal documents are much more detailed and can be found as exhibits to this filing. They contain all the nitty-gritty terms and conditions. Also included are legal opinions from their lawyers confirming the validity of the shares and pre-funded warrant shares being issued. This provides a layer of assurance for investors that the securities are properly authorized. And a standard disclaimer here, this report is not an offer to sell these securities, nor is it a solicitation to buy them. You can't just go out and buy these because of this report. Any actual sale will happen through a prospectus. This section confirms that the common warrants their underlying shares, the placement agent warrants, and their shares are being issued without registration. They're relying on exemptions from the Securities Act, which, as we mentioned, is common for private placements involving sophisticated investors. Finally, they've also filed a press release from the 20th of October 2025 announcing the pricing of these offerings. This is essentially them officially telling the world about the deal. And that brings us to the exhibits. This is where you find the actual forms of the warrants, the purchase agreement, and those legal opinions we talked about, along with the press release. Now, looking at this filing, what is the story here? Kartoon Studios is clearly in a growth phase, and they're using equity financing to fuel it. They are betting heavily on new content and their own streaming platform, Kartoon Channel, to drive future revenue. The amount of capital they're raising, combined with the future potential dilution from all those warrants, indicates a significant push for expansion. The strategy is clear: invest in intellectual property, expand their content library, and leverage their own distribution channel. The risk is that the new shows might not be hits, or that the streaming service doesn't gain enough traction. Also, with so many warrants out there, the potential for dilution for existing shareholders is quite high if those warrants are exercised. This means the earnings per share could decrease significantly if the company's profitability doesn't keep pace with the increase in outstanding shares. On the positive side, by securing this funding, they gain the resources to execute their ambitious plans. The focus on specific upcoming series and the Stanley Universe expansion shows a targeted approach. The involvement of an institutional investor and a placement agent suggests a level of professional execution to this fundraising. In conclusion, Kartoon Studios is making a bold move to fund its expansion. They're essentially placing a significant bet on their content pipeline and their direct-to-consumer platform. Investors need to weigh the potential for growth against the substantial dilution risk from all these warrants and options. It is a company with a clear vision, but one that requires careful monitoring of execution and market reception of their new ventures. Alright, that is our decoder ring for Kartoon Studios' latest move. What is your take on these numbers and what they signal for the company's future? Do you think their content strategy will pay off? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out the Discord in the description to keep the conversation going. Thanks for watching, see you next time.